one of the things that my opponent had stated was that right now employers need to pay 6% of the employers and the employees' first $7,000 that they earn. That is the percentage that they used to need to pay. But since the recession hit, the federal government gave the all employers a tax credit. So now they pay only 0.6%, and they will keep that 0.6. Well, actually, and then they just increased it 0.3%. The 0.6 is the $42 that they've had to pay, and then the increase of 0.3% is the additional $21 they'll have to pay per year if they keep the employer on for the whole year, as I stated earlier. The second thing is there was a survey that was done in Washington State where they sent a survey out to 31,744 people who had exhausted all of their employment benefits. Out of that, 5,065 responded, and these are results I got. Nearly 25% have returned to work. Nearly 25%. That's less than a quarter return to work. And 80% of those back at work are earning less than in their former jobs, on average about 29% less. Of those who returned to work, about 19% found jobs out of state. Of those who haven't found work, about 13% have stopped looking. Nearly 90% of the exhaustees said they visited a WorkSource center, and nearly half of the reemployed exhaustees said WorkSource services helped them find employment. The trade commissioner in Washington had this to say about it. The survey contradicts the perception that unemployed workers wait until their benefits run out, then quickly find work. Also, I wanted to touch on the fact that, or on the comment that the money that we use to extend the benefits should be used to create jobs in the economy. The money does go towards creating jobs in the economy. There is a formula that the Congressional Budget Office uses. For instance, this last extension, they said that it would create 560,000 jobs, and by discontinuing the benefits, that the employment rate would go up 0.4%. The Economic Policy Institute stated that long-term employed workers are almost by definition cash-strapped and have very little choice to immediately spend their unemployment benefits. Unemployment benefits spent on rent, groceries, and other necessities increase economic activity, and that increased economic activity saves and creates jobs throughout the economy. For this reason, economists, including those of the Congressional Budget Office, widely recognize government spending on unemployment insurance benefits as one of the most effective things that can be done in a recession to generate jobs. So extending the benefits would create jobs and help people who are in need of them.